Hey everybody, Chuck Barone. Friday, February the 3rd, 2023. And as always, we want to welcome everybody to the show. Just got to say thank you again for your guys' support. It means the world to us, guys. It's what keeps us going here every day. You know, there's videos and trying to get some consistent work out and make it meaningful. Not super easy to do. And you guys keep coming back. That's what keeps us going. We appreciate it. Markets today, what a day, what a day, what a difference a day makes, right? So let's wrap this market up real quick. Stock market today down across the board. Big economic data coming out, jarring the markets. I was warning you guys just yesterday about this, right? If any little blips come across, this whole thing could change in a day. Expect volatility, and boom, it literally happens the very next day. So as most people know, as most of you guys probably know, the big jobs report comes out today, totally dampening this idea that the party, now the party's back on, inflation's over, the Fed can start cutting this year, hopefully, and all that changed today. So market, literally everything was down today. Stock market's down across the board, Dow losing 127, NASDAQ basically giving back all the gains it made yesterday. Bond market's selling off like crazy. Check out these yields, how they're moving, guys. 10-year up 13 basis points, 3.53%. Still super low for that 10-year, but a 13 basis point move in the markets it's like a 3,000 or 4,000 point move in the Dow. So it's just a big move today on the sell-off with yields climbing. The 2-year up 19 basis points today, 4.29%. It is not looking good out there, guys. The economy, it's amazing to me. Good economic news is now bad. The dollar today up more on this scare, up more than a point, up 1.13 on the index, 102.99, now threatening to go back up over 103. I was just thinking it was going to probably on its way down to 100 or less. Boom, what a difference a day makes. Metals today on this strong dollar, of course, not having a very good day. Gold down $48.30 last time I looked at the Kidco site, $1,865 per ounce. Silver down $1.14, $22.41 per ounce. This is a very small correction, guys. Don't let those numbers freak you out. The dollar had a monster day today. Metals coming down, but not in any way dramatic. The prices are still holding. These are good numbers for metals. Worry not. Oil today down $2.65 per barrel, $73.23 for a barrel of West Texas Intermediate. Natural gas under $3 now, around the $2.70 mark last time I saw. This stuff is not holding up. I guess it's just all part of the big sell-off today. Bitcoin today down to $152, 23,421. Nothing there. Still a very strong price for Bitcoin. It looks like there's some support there because today would have been a reason to sell. Didn't happen. News you guys need today. Well, here's the big one. Jobs, guys. It's bananas, man. So, Department of Labor comes out with their report. ADP was talking about, remember just a few days ago, ADP versus the Department of Labor, right? 517,000 jobs created. Blowing out all expectations. Literally, they were expecting 187,000. The Department of Labor was. So even their own prediction, literally 200% higher than what they're thinking. A mind-blowing number for Wall Street. And what this tells us is the jobs market is just, we read about over 100,000 layoffs in tech. And that's been dominating the headlines because everybody sees that. Google going to lay off 3,000, Meta going to lay off, Intel going to lay off, everybody laying off in the tech sector. Everybody believes this job market's just crap. Well, guess what? Not so. Unemployment rate falling to 3.4%. That's the lowest it's been since 1969. I always am a little bit dubious about a lot of these statistics, guys, but it can't be where any good news comes out, it's a big lie, and any bad news comes, and that is, of course, gospel truth. So take these numbers for what you will, but the indication is, if they're trying to send a message through crappy numbers, the message is they're going to leave the pressure on the Federal Reserve. This keeps the pressure on for them. It gives them the signal that the economy is strong enough to withstand these price hikes. It's just crazy how it all changed in a day. So like I say, what a difference a day makes. Yesterday, market rallied like crazy. Everybody believed that the Fed was on its way to cutting rates later this year. Money markets priced in a 60% chance of rate yesterday, just yesterday, a 60% chance of rate cuts this year or later this year. By lunch today, 60% was down to 30%. Because it's just not going to happen, guys. We know the history on inflation. It doesn't just go away like that. Nothing moves in a straight line. The market's simply looking for a reason to rally. There's a ton of cash parked on the sidelines just sitting there. These people want to get this money reinvested. They want to believe any bit of good news is the final word. It isn't. So here we sit today in a completely different space than we were in just yesterday. Economic news. Wage growth coming down. So wage growth in January, up 4.4% from the previous January. It's still a little hot, but it's coming down from 4.8% year-over-year growth in December. And it was 6% in the summertime. So wage growth slowing down, another sign for the Fed that what they're doing is working. I think we can pretty much really now bake into the cake this rate. We know we got another one coming in March. I think we can pretty much bake into the cake now. There'll be a third one sometime before they actually pause. And then it's going to be sit on these higher rates for a while until they're absolutely convinced that inflation is where they want it to be. Powell said it himself yesterday. He said, I would rather raise rates too high and keep them high for too long than cut 1 second too early. So this shows you the bias. The data now supporting what they're doing. And again, believe the data or not, it's the only data we have to work with, right? So the market's going to react to this data whether we believe it or not. So we have wage growth coming down. We have the job market sizzling hot. Now check this out. Factory orders. Factory orders in December up 1.8%. So now the manufacturing even doing better. That's up from a negative down 1.9% in November. So factory orders picking up. I mean, I guess it's just a 1 month thing, but it's just the data we're getting. It's very mixed data. Don't get me wrong. We're certainly not out of the woods on anything yet, even as far as a deep recession. But check it out. I mean, it's been one thing after another. Productivity up. Employment up, wage growth coming down, but still good, and good for people who work for a living like I do, right? Factories doing okay. Today was a big day for services. Services rocking and rolling, hiring people like crazy, doing very well. So now we got this data. It is what it is. And it's pointing us to a conclusion. And the conclusion is what we've been saying. The Federal Reserve is going to raise rates more than people are expecting, especially the market right now, and it's going to leave them higher for longer than the market expects. And it's just that simple. And the data, at least the way I'm interpreting this data, leads us to that very conclusion. Now to wrap up the week, I just was reading this article today and I wanted to share it with you guys. You know, I've been talking about the apocalypse and, you know, the world's off its rocker and how friggin' crazy our world we're living in today is. From the president down to the lowest friggin' bum on the street. It seems like everybody's off their rockers, man. But listen to this. The state of Massachusetts has now proposed a bill to allow prisoners to donate their organs or their bone marrow for reduced sentences. I mean, what could possibly go wrong here, right? So I guess they're, you know, we all know about the shortage of organs and how many people are waiting for transplants in this country. I would think that the state of Massachusetts, if they're going to do this, might find better ways to get people, you know, protect people's health, starting with some education earlier in their life, so they're not needing organ transplants, you know, because a lot of them, of course, are genetic and certain natural causes, but a lot of organ transplants are caused by poor lifestyle choices, man. Okay? So now they're going to go to they need these organs, so now they're going to go to the prison population to get them. And they can actually reduce their sentences, depending on their donation, from 2 to 12 months. So I'm guessing they'll be lining up to donate bone marrow, because you can recover from that pretty quickly, and start chipping away at their sentences that way. I mean, it just keeps getting sillier every single freaking day, guys. Anyway, the weekend is here. Hallelujah. I'm really sad my beloved Bills are done this year, but, you know, we got the Super Bowl coming up, not this Sunday, but next week. So this Sunday's unless you're into the Pro Bowl stuff, a football-free weekend. We get to just relax and enjoy our families and have a weekend away from this nutty, crazy friggin' markets. We'll be back on Monday. I'm sure next week will be just as fascinating as this week. I can't wait to see how these markets are going to open on Monday, because these last 2 days have been just as bookendy contrast as you can possibly get. We went from bullish to bearish in one 24-hour period. So that just means over the weekend we could certainly wake up Monday and be bullish again, depending on what little bit of data or rumor trickles in. Or we could be staying here in bearish, negative territory, in negative stuff where the market's not happy. I can't wait. Great weekend, guys. We appreciate your support. We'll be back on Monday. We'll give you an idea of what to expect for the week and how it'll affect your investments, your portfolios, your retirement. We appreciate your support. We'll see you on Monday. Until then, guys, have a great weekend. Take care. Thanks.